In this presentation, we will work a comprehensive problem related to a not-for-profit, non-profit organization, one which is a private college. We're going to have the information on the left side. We're going to put that into the blue area or work through it within the blue area on the right side, this blue area being the general journal. We will then post that general journal to our worksheet, our trial balance worksheet, this being the beginning balances, this being where we're going to post it in that blue area, giving us the ending balances. We'll then create the financial statements from the ending trial balances from our trial balance worksheet. Considering the trial balance worksheet, note that it will be in order and that the assets will be green. The liabilities will be orange. What would be the equity section in a for-profit organization? What is here called the net assets section, assets minus liabilities being equity for a for-profit, being net assets or called net assets for the not-for-profit for the private college. Then everything below there is going to be part of what would be the income statement or the statement of activities for the college. In other words, the temporary accounts, those timing accounts, those accounts that would typically close out to what would be the equity section in a for-profit, what would be retained earnings, or the capital account for a corporation, or a sole proprietorship or partnership is going to be down below for the not-for-profit organization. You'll see that and note that the major thing we need to account for the not-for-profit is breaking out both in what would be the equity section or the net assets section and the income statement type section or the statement of activities type section is the breakout between the without restrictions and with restrictions. We're going to have to have that breaking out. You can kind of think of it like two different fund type of accounting. But we need to make that distinction. That's going to be the major difference as we go through and record these items, as well as just the difference in names, including, of course, net assets versus an equity type of account, and the different types of revenue kind of activities that we would have for the not-for-profit organization, as well as the expense names for the particular type of industry and organization that we are discussing. As we go through this, we are going to be having journal entries that we'll be recording to two sets of the general journals here. We want to hide the second set of general journals, so we're working side by side, then we'll unhide when we need it. So in order to hide these columns, these general journals, to get them out of the way as we start off and work as efficiently as possible, we're going to put our cursor on the letter K here. So it looks like this, not like this, but like this, not like that, but like this. Left click on it. And then we're going to drag over to these O, let go, right click on those selected columns, let's say, and then we're going to hide those. Don't delete them, by the way, hide them. And then we're going to have this, and we're going to have this side by side. So we got our information on the left. We've got where we're going to put it in the blue area on the right. We're going to post it right next to it over here on the right of that. Now we're going to work on number one. Typically, as we go through these, I'll highlight these and I'll make these green as we go so we know which one we are on. Number one says we have the tuition charges total at the $245,710. Of that amount, included in that amount, we have scholarships and we have tuition waivers for scholastic achievement. So in other words, waivers of achievement of the tuition for certain folks. In other words, for a scholarship, so therefore they're not going to be paying us in the future. And as well as the tuition waivers for scholarship achievement, we waived the tuition and therefore we're not going to be getting any money from them as well. Let's record these items first. So we're really concentrating on these three. I'll make them even a different color so that we can concentrate on them differently. And so number one, now we're going to say that we have the tuition, and that means that we haven't collected on it yet. We're going to say that it's going to go into a receivable. So it's basically on account. So we're going to say this equals, and we're going to pick up the tuition and fees receivable account. So we expect to get paid in the future. However, we don't expect to get paid the scholarships and the tuition waivers because we're not going to get any funding or any money for that. So we got to record the tuition and fees discount and allowances. And if we look at the trial balance, that's going to be down below. We got the tuition and fees discount and allowances. So we're going to scroll back up top, and you can see that's kind of like a contra revenue type of account. Obviously, tuition and fees is going to be our major revenue without donor restrictions. And then we're going to say that we have this tuition and fees discount and allowances, kind of like a contra revenue account. You can think of it similar as returns and allowances in a company that's going to sell inventory, sell goods. So we're going to say, all right, this is going to be equal to the tuition and fees, discount, and allowances. And then we're going to have the tuition fees without donor restrictions is going to be the revenue that we will have. So the revenue, the total revenue, is going to be the tuition and fees without donor restrictions. So basically we can think of the receivable, the amount that we expect to be collected on, as the total minus these two amounts, right? Minus the scholarship, minus the tuition for scholarship achievement, because we're not going to be receiving those because we're not going to get any money for those. So I'm going to say the receivable is this amount minus the scholarships, minus the tuition waivers for scholarships. And then we've got the discounts amounts, and that's going to be these two items. That's going to be the scholarships and the tuition waivers of the $21,770. So I'm going to say this equals the sum of these two amounts. And then we have the total that we're going to include in tuition fees without donor restrictions, kind of like the revenue account, which will be the sum of these two. Or you can consider just being this number. I'm going to use the sum function, the plug function, or formula, the negative sum of these numbers, and that'll give us the 245,710. 245,710. So we're recording, in essence, the revenue going up by 245,710, but then also on a contra revenue type of account, decreasing the revenue of the 21,770. This might make more sense once we post it. You'll be able to see that. All right, so we're going to record the tuition and fees revenue up top. So tuition and fees revenue, that's going to be in cell R5. So within R5, we're going to say equals, scroll over to the 223,940, and that's going to be increase of that number. And then we're going to go to the tuition fees and fees discount. So we'll scroll down to the tuition and fees discount. That's going to be here in cell R20. Within R20, we're going to say equals, scroll back up, and we'll pick up that 21,770. So that's going to increase that in the debit direction. Then we're going to be picking up the tuition and fees without restrictions, the final amount. So we're going to scroll down to cell R19 equals, scrolling back up to pick up that amount, the 245,710. So there we have that amount. Now, if we look at the change, the activity, and what would be similar to the income statement, kind of like net income or the change in net assets, we're going to have this number, which of course is summing up all the dark blue items, which is going to be kind of like the temporary income statement number type numbers. So this was the total revenue, which is a credit balance on the income statement, minus the debit balance of the tuition fees discount. So the contra revenue giving us the net of the 223,940, which would be similar to net income. Okay, so let's go back up top. And now we're going to be picking up the second half of number 1, where we have the tuition refunds. Tuition refunds, we're going to call this just 1B. So we had to refund the tuition. And so in order to do that, we're going to say we refunded it with cash. And we're going to reverse straight to basically the income statement type of account. So in other words, if there's a refund, we said we got tuition and we are refunding it. We originally recorded that, we would have recorded that as a credit to tuition fees without donor restrictions, typically. And so now if we're going to refund it, we're going to reverse this account. This is a income similar account. It has a credit balance. Now we're going to debit it, decreasing it. Now this might look a little bit funny because we don't always do this in a for-profit type of organization. If we gave a refund or say someone returned something, we might have another kind of contra account such as this account that would be returns and allowances. Here, we're going to just take it directly out of the revenue. We're going to reduce revenue, which you don't always see happening. So we're going to reduce the revenue. It does make sense though, because obviously revenue went up, so we're going to reduce it. And in the for-profit organization, oftentimes we make another account, which is in essence reducing revenue, but making a contra revenue type of account in order to do so. So we're going to debit the tuition and fees without donor restrictions, and then we're going to credit the cash, which we're going to pay back. So cash is going down with the credit. All right, and then we're going to pick up the number that's going to be in cell H7, and we will say this is equal to that 11,380. That will be the debit, that will be the credit. Now we're going to post this out. We have the tuition and fees without donor restrictions. I'm going to scroll back down where we have the tuition and fees without donor restrictions. We are in cell R19. I'm going to double click on R19, go to the end of it, say plus. then point to that 11,380 and enter. Then we have the cash and cash equivalents, which of course is going to be our top account, our first account, our favorite account, cash here, is going to be in R3, where we will say equals, scroll over and point to that 11,380. Now that does make us go into a negative balance if we're overdrawn in cash. Don't let that throw you off. And then we have the final component of number 1. Tuition waivers for students serving the school are accrued. So we're going to enter, we have students that are serving the school. We're going to say that they're going to be teachers' assistants, and we're going to accrue the wages that they're going to have because we're going to waive the tuition for the work that they have done. So we're going to record then an expense for the instruction expense. We're going to say it's part of the instruction that they are doing. So we're going to record an expense. So we'll say we have instruction expense down below. And then the second half of it is going to be, we're going to say they haven't yet, they've accrued the waiver, and therefore we haven't yet provided the waiver. So therefore we're going to have a liability account, and we're going to call it accounts payable and accrued liabilities. Accounts payable and accrued liabilities, that's going to be for the amount of the 17,400. That of course will be the debit and the credit. Now we'll go ahead and post this out. We've got the instruction expense. So we're going to scroll down to instruction expense. That's going to be in cell R26, where we will say equals, scroll back up to pick up the amount of the 17,400. And next we're going to have the accrued payables and liabilities. Accrued payables and liabilities will be in cell R13. Within R13, we will say equals and scroll over to the credit, 17,400. There we have that going up in the credit direction. That of course puts us back in balance. Now we're going to see the next transaction that we have. We're going to move on to number 2. So we will make all of number 1 back to the non-greened, and we will then go to number 2. So number 2, going to make that green. Next we have number 2. So number 2 is going to say cash contributions without donor restrictions. We have cash contributions with no donor restrictions of 2,390. Then we have pledges to be collected of 561. So pledges that have not yet been received. Then we have contributions to endowment. So that's going to be to the permanent endowment. That's going to be 350. Then we have the collection of pledges receivable that were unrestricted, and that's going to be the 836. So we're going to start off with cash here. We're going to say that we have cash. Cash is going to be increasing with a debit. We're going to be combining some of these into one journal entry, of course. So it's going to be a little bit, possibly a little bit more complicated to do that. You can think about these with individual journal entries if you so choose. So we're going to debit the cash, and then I'm also going to debit the receivable because the pledges is going to have a receivable. I'll put the number in cash in last. That's going to be the last thing. That'll be basically the plug that we will have for this transaction. So the pledges to be collected, that's going to go into the pledges receivable. That's going to be pledges receivable, and that amount we know to be a debit, increasing the asset of the 561. Next, we have contributions without donor restrictions. So we're going to put in the credit related to this 2,390. So we have cash contributions without donor restrictions. That's going to be a debit to cash. And the other side is going to be to our income type statement account. That's going to be the contributions without donor restrictions. Contributions without donor restrictions. That's going to be a credit. So I'm in cell I-15. I'm going to say negative of that 2,390. The next item is going to be we're going to put the other side of the pledges now, which is going to be a contribution with restrictions, that restriction being related to time. So although we are going to be recording basically kind of like a revenue account, we're going to restrict it given the fact that there's kind of a time restriction. We haven't yet received those pledges. So we're going to say this is going to be equal to contributions with restrictions, that restriction being time. And I'm going to say in cell I-16, negative of that 561. Negative of the 561, picking up that credit amount. Next, we're going to have the 350, which is a contributions to the endowment. So a contribution to the endowment, the credit side of that, the debit's going to be cash that we'll do at the end. The credit side is also going to be a kind of like income statement account. It's going to be a contribution account. And this time it'll have a restriction, but the restriction here being to the endowment, the permanent type of account, as opposed to the time restriction. So we're going to put it into that account, and that's going to be for the amount of the credit of the 350. And then I'm going to put the pledges receivable, which is going to be decreasing by the collection of pledges receivable that were unrestricted. So this is where we have a collection of receivables we're going to put in the same transaction here, and the cash would then be the debit side. The credit is going to be reducing the pledges receivable now. So we'll be reducing the pledges receivable up top. And so we'll say pledges receivable, and that's going to be the credit of the 836. And then we will do the plug formula to put the plug in here, negative sum of these items. And there's our plug formula, the 3576. And then note, you can also think of these, of course, as individual type of transactions. So if we go through this again and you want to think of them individually, if this long transaction is a little confusing to you, just note we have cash contributions without donor restrictions. That would be a debit to cash, and a credit to where we put it here, the contributions without donor restrictions. And I actually picked up the wrong account. It's a good thing we checked it. This first one should be without donor restrictions. Is going to be the credit. And then this one's going to be pledges to be collected. That would be a debit to accounts receivable here. And we have the credit as well to the contributions without donor restrictions if it was his own journal entry. Then we have contributions to endowments. That would be a debit to cash. And the credit would, of course, be the contributions with donor restrictions to the endowment. And then we have collections of pledges receivable that were unrestricted. And so that's going to be a credit to the receivable and a debit to cash. Okay, let's go ahead and post this out then. We've got cash up top. We're going to scroll over and pick up the cash over here. We are in cell R3. I'm going to do this with the keyboard this time. We're going to say F2 plus F2 and scroll down to that 3,576 and enter. Next, we have the pledges. That's going to be the pledges receivable. So we'll pick up the pledges receivable, and that will be in cell R7. So within R7, we're going to say equals, and we'll pick up the receivables of the 561. Then we have the contributions without donor restrictions. So that's going to be in the kind of income statement type of accounts. Contributions without donor restrictions in R23, where we will say equals, scroll up to that 2,390 and enter. Then we have contributions with donor restrictions, that restriction being time. So we're going to scroll down to the contributions with donor restrictions, that restriction being time. And we'll scroll back up and we're going to pick up the 561 and enter. Then we have contributions with donor restrictions for the endowment. So we'll go over to the R25 equals, and we'll pick up the 350 and enter. Then we have the pledges receivable. So pledges receivable, that's going to be a receivable up top. And so we are in R7, something's in it. So I'm going to say F2 plus F2, scroll back down with the arrows, and we're going to pick up that 836 and enter. All right, so if we scroll back down, we're going to say that should put us back in balance given by the green zeros. Everything looks good. Notice the cash is still overdrawn. Don't let that throw you off. And let's go back over and see what we have next. Number 2 has now been completed. We're going to ungreen number 2, therefore, and we will then green the number 3, the current item we are working on. And then I'll put the old number 3 on this side, and we're going to say the collections for tuition and fees receivable. So collection for tuition and fees receivable. We're going to debit the cash that we're going to receive, and the credit is going to be for the receivable. The receivable being going down, the receivable related to tuition and fees. So we're going to say debit to cash. Cash is going to be up top. That's going to be on our debit side at the first account in our journal entry. Scrolling up top, we're going to pick up the cash amount. Then the second item is going to be tuition and fees receivable. That's going to be an asset account that will be decreasing. So I'm going to scroll back up. We're going to pick up tuition and fees receivable and enter. And then the amount will, of course, be that 222840. That'll be equal to the 222840. That's going to be the debit and, of course, the credit as well. Let's go ahead and post this out. We've got the cash first. Cash is going to be up top. Scrolling up top to cash, we're going to be in cell R3. Within R3, we're going to say F2 plus F2. Scroll back down, and we'll pick up that 222840 and enter. Next one we're going to pick up is the tuition and fees receivable. So we're going to scroll up to the tuition and fees receivable. That's in R5. Within R5, something's in it. So I'm going to say F2 plus F2. Scroll back down. Pick up that 222840 and enter. So there we have that. That should put us back in balance. If we scroll back down, it looks like we are indeed in balance. So let's see what we have next. We're going to scroll back up. We're going to ungreen number 3. Right click and ungreen the number 3. Where's the ungreen? Oh, it's up top. Here it is. We'll make that ungreened. And then number 4, the one we're working on, that's going to be green. Next, we have deposits returned to students of the $10 here. Deposits returned to students. So I'm going to say this is going to be number 4. Cash is going to be going down because we are returning the deposits. The other side is going to be in this deposits held in custody for others. So we have this liability that we needed to pay out. We are now paying out that return, and therefore it shall be decreasing. I would start then with cash anytime we can. Cash is going to be the easier account to think of the 2 or 3 or any number of accounts. Oftentimes, cash will be the easiest one to think of. So I'm going to say cash is going to be first. Cash is going to be the credit of the 10. And then we're going to have a debit, and that is going to be of the 10, of course, as well. And the debit is going to be going to the deposits held in custody for others. Deposits held in custody for others. Okay, so now we will post this out. So we have up top the deposits held in custody for others. That's going to be in cell R14. Within R14, we're going to say equals. Scroll back down, and we're going to pick up that number 10. So there is the 10. Then we have the cash and cash equivalents. Cash and cash equivalents will be up top. We are in cell R3. Within R3, something is in there. Therefore, I'm going to say F2 plus F2. And then scroll back down to pick up that credit of 10 and enter. So there we have that. If we scroll back down, then we see that we are back in balance given by the green zeros. Going all the way back to the left, we are going to ungreen number 4. So number 4 will then be ungreened like so. And we are now on number 5. So number 5, this is where we're going to be recording out our expenses. We're going to, in essence, record all the expenses at one time. Actually, number 5 continues on down here. This is all number 5. This is a long number 5. So we're going to scroll over here. We're going to say this is going to be number 5, and then we'll list out our expenses. So again, we'll do this all with one long transaction to kind of simplify the problem. This is something that you can find that will be much the same in normal financial accounting. It's not something that will differ much from the not-for-profit accounting. Therefore, we will enter all of this with one long transaction here. So we're going to say that we have the instruction. That's going to be instruction expense. So I'm going to scroll back down. We're going to pick up the instruction expense. That'll be the debit. And that's going to be 4 equal to that 86,460. Then we have the academic support. So that's going to be academic support expense. And the amount there is going to be the debit of the 23,550. Then we have the student services. So we're going to say student services expense and enter. The amount there is going to be a debit. So the debit is going to be equal to the 37,790. Then we have the institutional support. So we have the institutional support expense. Institutional support expense. And the amount there is going to be in cell H29 equal to the 28,710. And then we have the prepaid assets used. So prepaid assets used means that the prepaid assets will be going down. So if we consider the prepaid assets, then we're going to say prepaid assets are up here. They're going to be an asset account. This is an adjusting type of entry. And typically they'll ask the adjusting type of entry and say, well, this is what the adjusting entry ending balance should be, in which case we would have to do a subtraction problem. Or in this case, they simply said the prepaid assets that were used, and therefore we'll just record the expense given to us in the problem. So we're going to say, all right, prepaid expenses used. That means that we're going to credit the prepaid expenses. We're basically combining the adjusting journal entry into our problem here. So prepaid assets will then be the credit. It's going to be going down by the 546. And then we have the accrued expenses, or expenses that were accrued. So that's going to be increasing the liability, the accrued expenses. Again, this is basically an adjusting type of entry. So we're going to say the accrued expenses are going to be increasing. Going to scroll up. We're going to pick up those accrued expenses, which are in accounts payable and accrued expenses. The amount's going to be in the credit column. So I'm going to say negative of that 4791. And then the last item, then we're going to say the plug item is going to be the cash. And then, of course, we will come to this one shortly. This will be done in a separate transaction. So the plug account then is going to be cash. So we'll pick up the cash up top. So we're going to pick up cash. There it is. And that's going to be on the credit side. We're going to use the negative sum. Negative sum being our plug formula. And there's our transaction. So the debit's then adding up to 176,510. The credit's adding up to 176,510. Let's go ahead and post this. Up top, we've got the instruction expense. So the instruction expense, expense is here. That's in R26. Something is in it. So I'm going to say F2 plus F2. Scroll over to that 86,460. Next, we have the academic support. So academic support is going to be in cell R27. So we're going to say equals, and we'll pick up the academic support. Next, we have the student services expense. So student services expense in R28 equals the 37,790, and enter. Then we have the institutional support expense. So the institutional support expense is going to be in cell R29. R29 equals, scrolling to the 28,710 and enter. Then we got the prepaid assets. So the prepaid assets is going to be up top in the assets section. Prepaid assets will be in cell R9. Within R9, we're going to say equals, scroll back down. Pick up the prepaid asset of the 546 and enter. Next, we have the accounts payable and accrued liabilities. Accounts payable and accrued liabilities. Scrolling back up, we're going to pick that up in cell R13. So within R13, something's in it. So I'm going to say F2 plus F2, and then scroll back down. And we'll pick up the accrued liabilities and accounts payable. In this case, accrued liabilities. And then lastly, we have the cash and cash equivalents. That will, of course, be up top in the first account in cell R3. Something's in it, so we're going to say F2 plus F2. Then scroll back down and pick up that credit balance of the 171, 173, and enter. That should put us back in balance, as we can see down below by the green zeros. Lastly, for number 5, we have the expenses resulted in the release of net assets with donor restrictions. So in other words, we had assets that were restricted. Some of these expenses then fulfilled the obligations for those restrictions, and therefore we want to, whenever that happens, move the items out of restricted to unrestricted. That's always going to be our goal. Whenever we can do so, because then we're more free to be able to use the money as the organization. If we go back over, we're going to say that that's going to be these two accounts. Net assets released, satisfaction of purpose restriction without donor restrictions, and the same except with donor restrictions below that. This is going to be the two accounts. I would think of them kind of like income statement accounts. The one without donor restrictions is going up, because we're now increasing the one because it has no restrictions. The one with donor restrictions then is going down. So we're going to say on the credit side, the one that's increasing is going to be the one without donor restrictions. The one that's decreasing is going to decrease with a debit. because it's going to be a revenue type. I would think of it as a revenue type of account. They have credit balances. Therefore, to make it go down, we debit it. Therefore, debiting the without donor restriction or with donor restrictions one, and the one that's going up will go up with a credit. That's the one without donor restrictions. So we then are going to pick up the amount. That's going to be the 7580. That'll be the debit and the credit. So there we have that, and then we will post this out. So we're going to post this out. You'll recall that the one without, or let's post the one with donor restrictions first. That's in cell R31. This will be the debit, where we will say equals, point to that 7580 and enter. Then we have the credit without donor restrictions. That's going to be in R30, where we will say equals, point to the credit side, the 7580 and enter. That then, of course, puts us back in balance. So this is what we have so far. We're going to continue on with this next time. So here's our trial balance. We are back in balance with it, and we will continue on with our transactions number 6 next time.